Once again, my name is Tasha M. Dyer, the creator of the BYOB Cash Out, and I want to welcome each and every last one of you all to BYOB Market Talks. Now, I want to definitely, we want to welcome everybody. Okay, I see Baton Rouge, Wisconsin, Torrance, California, West Palm Beach, Atlanta. You all are joining us. This is BYOB Worldwide. Now let's go ahead and make sure we share. I want to share my screen with you so we can go ahead. Now, we just had some news hit. So let me see here. Get this together. Let's see. We had some news. We had some trades. Some of you guys are wondering. I know I see the conversation. I get the messages. So some of you guys are wondering, how did you take that trade? You know, this is GBP NZD. We had the news. It actually dropped for, let's say, you're looking at, it was at about 153. It's dropped a little bit more. So you're looking at about 160. Another currency just pushed up for, which is NZDJPY. This one actually went for about 72, right? So we had some nice drops, and of course these aren't the only ones that went. But before we really get into what tonight's training, what I'm gonna walk you through, I want to, let's talk about the BYOB Cash Out and make sure everybody definitely understands what the BYOB Cash Out is, understand how to trade the BYOB Cash Out. And then what we'll do is we'll talk about how the news impacts it. Because when we started trading this morning on our 5 a.m. call, one of the things that we did identify is that today was a heavy news day, right? Another thing that we kind of talked about was Friday was NFP, non-farmer payroll. And on non-farmer payroll, you know, that's a day that will definitely move the indices, okay? And I actually had a question that came, was like, well, they hold on, let's make sure.
I'm muted now. I can't hear.
I had a question that came to me where I was asked, you know, they told me that they normally stay away from that, and they were wondering why is it that I like to trade that. So hold on. Okay. So what I wanted to do is, I don't want anybody to get into trading the news, right? This is not, tonight is not about, tonight is definitely not about, hey, go ahead and trade the news. Tonight is definitely about understanding how the news impacts the market. That's what this is. I definitely want you all to make your own conscious decision on how you apply that to the markets, right? That's what I want you to do. So, but tonight is definitely about how it can impact the market. So that's what we are tonight. But of course, I want to walk through what the BYOB Cash Out is, and then you'll actually kind of see how the technical, because I want you to see the technical and the fundamental, right? I definitely want you to see both sides of it. I want you to understand how you always analyze from a technical analysis standpoint, and then you can kind of see how the fundamentals impact that. So how does that impact the movement in the market? What does that do? So let's talk about that tonight. So as you're logging on, you know, it's still, as you logging on, still go ahead and drop it in the chat. You know, let me know where you're calling in from. This is BYOB Worldwide. So if you're just logging on, still go ahead and drop it in the chat. We definitely want to know where you are calling in from. So what the BYOB Cash Out is it's made up of 3 indicators. Okay, see, there we go, BYOB Worldwide. So we're looking at these 3 indicators, and the first one is the stochastic, right? The first one is the stochastic, and then we got our Hikinashi candles and our P-star. But I do want to know, before we even get into this, if this is your first time on our BYOB Market Talks, Let me get a 111 in the chat. And if you're still learning how to cash out, let me get that 222. So welcome, welcome, welcome. Definitely want to welcome you to the call. And welcome back to all you other ones that are still learning. So now here's my stochastic, right? I got my stochastic, and so I'm always looking at this first. My stochastic is a leading indicator, okay? Your stochastic is a leading indicator. So, okay, now what you're looking at is I need that blue line to cross over the red, and you see where I actually already have some circles on there for you. And so that crossover is very important. So if that crossover happens around that 80, I'm looking for a sell. When that crossover happens around the 20, I'm actually looking for a buy. So that crossover is very, very important. Now you notice where we are right here. So if I'm looking at real time, okay, if I'm just analyzing this from a real time, so you see that I'm around the 80, but I don't have a crossover right here. So if I wanted to kind of grab this and look at this stochastic right here, this is not, so I'm dropping the X. I'm putting the X right here because I don't have anything that's gonna tell me that what I'm looking for, I'm not able to sell it at this time because it's not selling. It's still straight up. I do not have my crossover. So this crossover is so very important right here. So I have to have that. Here I have that crossover. Here I have that crossover. Right here I do not have that crossover. I really want you to understand it, okay? Now, when I come here, what I need is my Hikinashi candles, okay? These are trend candles. So for those of you all who are unfamiliar with Hikinashi candles and unfamiliar with trend candles, now when you flip over, you see when you're going through the academy and you're learning how to trade, this is what everyone introduces you to. They're teaching you Japanese candles, right? They're teaching you what you're learning Japanese candles. And that's fine. I mean, these are very important. But if I'm looking at, when I'm looking at my Hikinashi candles, these candles actually interpret for you. They translate for you. So I don't have to. So yes, learn the Japanese candles, learn what they're telling you, but understand that these translate for you, right? Now, when this red candle has a flat top, see, this is part of that translation. So this red candle with a flat top lets me know about the trend. See, these are trend candles. And so as that trend is, they have that flat top, that lets me know that the trend of the market on this time frame is actually in a sell. So I'm losing that resistance. You notice when you begin to learn support and resistance lines and where they are, you'll begin to notice that this is pretty much, you'll start seeing where this actually takes place and where, where the flat top actually emerges and things of that nature. You'll begin to see where that happens, and it does happen around those support and resistance lines. So all of this actually works together. And then you actually have this PSAR that flips to the top. Now this shows reversal in the market. So when I got my PSAR on the top, now this is what the BYOB cash out is. So also something to understand is that when my stochastic is moving and my stochastic is moving down, you actually have that movement that's happening right there. That's momentum. So yes, it's not gonna stay at the 80, it's not gonna stay at the 20. So and this is also a leading indicator. So because this one comes first, you're going to have, it's oftentimes you're gonna have, by the time the other one flips, you notice like right now it's around 56. That's okay, right? That's okay. So this is the actual BYOB cash out the foundation. I'm on a 15-minute chart. And as you advance in your skill set, advance in your trading, you'll begin to understand that you can advance this. You can take this to others, time frames, other levels. So a time frame confluence is something I want to add to that. So when I use my time frame confluence, I drop down to the 5-minute chart. I go down to the 5-minute chart. Now on this 5-minute chart, it needs to still be selling, right? It needs to still be selling. So as it's still selling, what you're looking at is this happens first, right? It happens before. So if I'm looking at the fact that this actually happens before, right? And I'm looking at this happens before, so it happens before. So because it needs to still be selling, then I know that I'm okay, it's still selling. Now, when I go to the hour needs to be like, imagine you in a caravan for a car. Like, so this car needs, this is the person following you. The hour chart is following me. So because I know this hour chart is following me, right, it needs to still be coming with me, right? The hour chart is following me. So it needs to still be coming with me. So I need to know that that person is in a sell. So it needs to look like a setup. So it's still coming with me. And that's why that current swing in the market is in a sale. And that's what we're looking for. Now, when we were looking here, right, so that one, that would have been a good trade. Do your 10 pips and cash out. Now, when I'm looking right here, when I'm looking over here, now I actually have, we were looking here and this was around 80, but why on the 15-minute chart? Why was it pointed up? Let's go up to the hour. Let's go up to the hour time frame. Okay, when I'm up on that hour time frame, you notice that my green candle is still pointed straight up, right? That green candle is still pointed straight up. So my swing in the market is currently in a buy. So because my swing in the market is actually currently still in a buy, what is that telling me? That's actually telling me that I know I'm not getting ready to sell anything right now. So my swing in the market is in a strong buy. So I know for a fact I'm not about to sell anything at this moment. So it's actually looked like it's trying to close the gap up to this resistance line. So it's, you know, it's actually still trying to close that gap. So you know you're not about to sell anything at this moment. So that's why when you see that around that 80 and you see it's still pointing straight up, just go to your higher time frame and say, hey, what's going on? You know, what's happening? And you can kind of look at the higher time frame. So there's no need for you to just sit here and say, okay, I'll check back in 15, 30 minutes to see what's happening. You know, just go to your higher time frame, see what's happening, evaluate it. Oh no, my hour and my 4 hour is in a buy. It's no need for you to even come back and check the 15 because at this moment we know we're not getting a sell set up. So that's what you know, because it still has to close the gap, right? I know, and if it does go into a sell setup, it's nothing but a quick correction because it's too much momentum on this hour and this 4 hour. So that's the BYOB cash out. So before I go any further, are there any questions, comments? If you have anything, drop it in the chat. Go ahead and drop it in the chat and I'll get those questions answered before we go on to the next thing. I want to make sure you understand that BYOB cash out. Okay, so no questions, no comments? All right. Oh, thank you so much. I appreciate that. So, okay, so this is week 3 and it's really starting to make sense. That's awesome. And that's actually why I go over it every single call. You know, I'm definitely going to go over it on every single call. So how long to wait to take the trade? Because these are Hikanashi candles, once you have it, it's market execution. So these candles, so let me drop down to the 15-minute chart. So because these are Hikanashi candles, so and if we have time, I will show you a comparison of a price action trade if we have time tonight. I can't promise that we'll have time after we go through what I want to go through tonight, but just to kind of show you really quickly, just kind of looking at this setup right here, I'm actually going to drop a line right here just to kind of show you, okay? Because you can kind of see, actually, no, I'm not. I'm gonna drop something else because I want you to focus right here. So you can kind of see this is where you first got this. This is where you first got this flat candle. Okay. So this is where you first got that flat candle right there. Okay. And when you got that flat candle, when you see the candle right before it, it actually had a wick. Okay, it had a wick. And as I'm looking at it now, you see that wick in it, that means that there was something else going on underneath it. So now I have a flat candle. That means that the trend is actually getting ready, but there wasn't a reversal. So this is when a reversal was ready. So if I actually change to the Japanese candles, okay, you can see that look at this candle. So you can see that this is why I need both indicators. Underneath here, I was having what I needed right here as far as, right, you see that this is why you wait on Japanese candles. Look, I had the Japanese candles, but then you have to wait you got to wait a few candles before you enter the trade, right? You wait a few candles on Japanese candles. But now when that PSAR flipped, look at what happened. I got a nice solid fat red candle for a Japanese candle, right? I got a nice solid fat candle for a Japanese candle, and that's what I would have entered a trade. So if I actually cut my PSAR off, you know, that's price action. So that's like a little price action for you right there. And so you're actually looking at these candles and you're trying to read these candles and figure out when is your exact entry. So when I say these are the Hikinashi candles translate for you and they do all the heavy lifting for you, so you're not trying to figure that out, that's exactly what they do. So and then when you add the PSAR, because this is actual reversal in the market, it gives you the actual reversal. So when the momentum shifts, you notice, I'm gonna put the regular candles back on here. When that momentum shifts, right, you see my PSAR flips to the top. So this is why that PSAR flip is so important, because now that momentum shifts and I actually got that push down, and you can kind of see where you have another. So you got your major support and resistance lines that happen with the higher time frame, and then you got your dramatic ones that kind of happen on the smaller time frame. But when that momentum shifts, you can kind of see where you got that dramatic one, where you can kind of see the smaller one that's happening right there. And you can kind of see right when that momentum shift, right when you got that push right there. Okay, so you can still kind of see that in itself right there. So change this color, thin this out a little bit, and you kind of see it. So is just kind of different. So so that's where that comes in. And so that's why that's important. And so you already see, you got the red candle. So we know we got our trend going in the right direction, but that PSAR flip gives me that push, that gives me that momentum, that reversal in the market to tell me that's what I'm doing. Even on the 5 minute, you must wait for that PSAR flip. So, how long? It's not about the third candle. It's all about the 3 indicators. Let me go back, make sure I got all these questions. If I take the trade and it goes in opposite direction, do I give it time to come back? So if I'm looking right here, as long as you set your stop loss, this is your stop loss. This green line, it should probably be red, right? Stop loss. So this is your stop loss, right? This red line is your stop loss. So if this is my stop loss, I set this stop loss based, anytime you take a trade, you set the trade based on your proper risk management of what you are willing to, that trade is what I'm willing to let go of. This trade is what I'm willing to, this is what I'm willing to take a loss. So as long as I got proper risk management, that means that honestly, this one still hadn't come around and hit my stop loss. Be honest, it still has not come around and hit my stop loss. So even if, like, let's say I didn't hit my take profit, I would still be in this trade. This is not a trade I took. I'm just saying, for example, if this would have been a trade that I had taken, and this is because coming back around, I still would be in this trade. I would have still been in this trade because it hadn't hit my stop loss. It might be getting close, but it's not there. So you give it until it hits your stop loss. So, and honestly, you see that as long as your stop loss is outside of your PSAR, that PSAR is where you want your stop loss, outside of it. As long as that stop loss is outside of your PSAR, it's outside of your PSAR, okay? You want that stop loss outside of your PSAR, because even if you get some correction in there, even if you get some correction in there, okay? Even if you get some correction in there, then you're doing pretty good. And even with as crazy as the news has been today, you know what, let me not use the word crazy, is the amount of red folders that we have had today, and that's why I want to talk about that tonight. Is the amount of red folders. We still did pretty good with the BYOB cash out. I mean, you guys cashed out pretty good today. So even with the amount of red folders, and that's because you're knowing what you're doing. You're applying the rules, and so this is very important. So do you mind telling me the numbers that will represent my 10 pips? So did you see last week's training where we talked about the pips and how you enter it? Because I think that would do you a lot of justice. Because this is, I don't want you, like, I grabbed this ruler and I'll mark this and I'll pull it. Don't use this to try to measure your pips. Do not use this to try to count your pips. Think back to when we were in school and we used to do our math, and the teacher would always give us a X or F or take away our credit, wouldn't give us credit if we didn't do our work, right? I want to see your work. I want to see your work. If you want to accurately be able to count pips, and I'm telling you this from somebody who, when I began trading, for me, it was understanding how to count pips. And do not use, and I'm gonna tell you, your biggest crutch in handicap and learning how to count pips is going to be trying to use that ruler. You need to do a market execution, go back in and manually count your pips. And if you need to practice it, then you practice counting your pips by writing them out on a sheet of paper. You grab the number that's on the side from wherever you entered it. Where you entered it is on your phone, right? Where you enter it is on your phone, on the number on the left. So the number is on your phone, and then so you got to go practice doing adding and subtract. You just got to, the same way support and resistance line, you got to get on that chart and you got to turn to the line chart, and you just got to mark up some charts. You got to make it look like a coloring book. And the same way you have to practice counting your pips, you got to grab some numbers and you just got to count them. You just got to randomly select some numbers and do 10 pips, do 10 pips, do 10 pips on a sell, do 10 pips on a buy, but you have to do it manually on a sheet of paper. So when you actually get in the market, that is how you're going to, but trying to grab this ruler and do pips, you're gonna mess yourself up every time. So don't do it like that. Get a sheet of paper, and just like our teachers used to tell us, show me your work, that's what you have to do. Show me your work. So you have to do it the old school way. Now, let's talk about this news. Let's talk about this news and how, oh no, it's still selling. Hold on. Hold on, it broke through there. Where is this thing going? We still got in the money? So this thing might be trying to close this gap on this 4 hour. So I don't know who's still in this trade, but somebody might need to know that. So this one actually, the news actually spiked this one already, right? So now it's actually down to 176, right? So let's look at this. Let's talk about this. So when we're talking about the news, this is we had news that hit. Now, when you see the news, so this was today. This was today. So before we trade, we always check our folder. So February the 11th. So this morning we had a red folder. This was a heavy red folder day. We had a red folder. We had a red folder. We never enter a trade right before our red folders, right? GBP, that's what we always do. We pause, right? We don't know the direction. Now, one thing is so important. And I saw a lot of different people saying, oh, it's going to buy. Oh, it's going to sell. Oh, it's going to buy. A lot of people guess. We want to eliminate guesswork. This is not gambling, okay? This is real life. This is how we obtain wealth, okay? So the prediction, when we go to here, this is very important to understand. You got your previous, you got your forecast, and you have your actual. So this is what is forecasted. And then we have two. So I actually have this one on a different one, but so because I wanted to show you something else. I actually like this one though, but like if I'm looking at this one, you got your consensus. I mean, they actually, you know, you got your actual right here. So you got your previous, you have all of this stuff as well, okay? But this is what I really want you to understand when you're looking at this, okay? You have your, this is like what's projected, right? This is what they believe is gonna happen. So this is what it was previous, this is what's projected that's gonna happen. Now, why is this important? Why is this important? Okay, if it meets this or higher, that's positive. Like let's say this came out at 50% or something, that's negative. That's negative news, okay? This is positive, this is negative. So the news was positive. This was positive for the economy. So NZD, that means NZD was positive, okay? Remember that, NZD was positive. So they're believing that they wanted to really be like the same or greater, right? But they're talking about NZD was positive. So NZD ended up being positive, okay? Now, let's go over here to NZD. It's sold and it's still selling. So NZD, you have your base currency and your counter currency. Work with me. So you have your base currency and then you have your counter currency, right? Now, if my base currency is stronger, right? If my base currency, can I type today, is stronger, then I buy, okay? Okay. Now, if my counter currency is stronger, then I sell, okay? That's how this works. So if my base currency, and maybe it shouldn't be red. If my base currency is stronger, then I'm gonna, if my base currency is stronger, then I'm gonna buy. If my counter currency is stronger, then I'm gonna sell. So when the news hits, if it's projected that this, if it's projected or if it hits, so if you see that spike, like you see it, you see the news and it's, so my counter currency in this situation, NZD is my counter currency. NZD is the stronger currency. It's the stronger currency right now. The news was very positive, making it a very strong currency right now. That's why the spike sold. That's why it sold. In this case, NZD is the base currency. It's the first currency, so it bought. Does that make sense? That's how you know which way the spike is gonna go. Or so it was projected, but once it goes, that's how you know the direction that it's actually headed in, or that's the direction that it's going in. Does that make sense? 555? Ah, I got a yes. So I'm not, remember what I told you in the beginning, I'm not gonna tell you to trade the news. I'm gonna show you if you ever trade the news, because what happens, that's a projection. That's a projection. But there are times, I'm not teaching you how to trade the news. You gotta make that decision on your own. So I'm not gonna teach you how to trade it, because there are times, now look at this. There are times where it comes out and it's not, it's projected that, look, and what happens is it doesn't come out. Well, that's not a red folder either, but it comes out and it's not what it projected. Like, can I get a red folder, please? So there are times, I'm looking for a red folder. So there are times it comes out where it comes up and it's not, you know, it comes up, thank you. And you see where, look what it's doing right there. So, and it's lower. So tonight's objective is not to teach you how to trade the news, it's to teach you how to understand the news, right? And then you're the signal. You are definitely the signal And then you can actually make that decision and go in and understand how you want to react to it, right? So that's why you can see some people in there like, I grabbed it. Oh, I smashed it. Oh, you know, I took profit, or, oh, I did, you know, X, Y, and Z. Or, you know, when we come back and I can show you like this one I said for January, where you have your non-farmer payroll, where the projection, right, for January, which was expected to be less because this was December's, was 256, right? It was higher. And then, okay, I will. And then, so this was previous. This column means previous. This is what is projected. And then this is actual. So you look up here, you see previous. So this is what they're projecting, right? This really means what they're projecting, and this is what actually happened. So this is after the news is released, okay? This is after it's released. So this column will be empty until the news is released, okay? And this is like the difference. So if I'm looking at it, so this was December's, and I'll go pull December's. And so this is the month prior or whatever. So if I'm looking at non-farmer payroll happens once a month on the first Friday. That's what I'm looking at right now. So this is non-farmer payroll where you had the previous month. So it was 256 was at an all-time high. This is what they projected for, you know, we're looking at January. So this was for the previous month. It all depends on the report that you're looking at too. So non-farmer payroll comes once a month. So, and it's all the data from the previous month. You actually have to go into these reports. Like you can click this and I can actually go into the report and I can get more information. So every report is going to be different. So you just going to have to go to the website and you're going to have to play with these reports. So you click the report, they'll tell you what the report is. So this actually tells you, and it'll break it down and it'll tell you the next time, the next release, you know, so you actually have to go in and read it. So it's not, I don't have time to break down each report, but if you want to know how these reports impact the economy, how often they come out, what they are, you can actually go in and read each one that you want to, or what they are. But that's what these are. So, right? So, but for this one specifically, because this is something we look at and like to trade each month. So non-farmer payroll. And I'm looking at this. And so if I'm looking at this and you see December's was 256 and January's was 164. How many jobs added, right? 164,000. So, right. And how many actually, this is what was projected. So this was negative, right? This was negative. So this was a negative report. Now, of course, you had Christmas and everything else. But this is what was projected, and this is why I'm telling you tonight. It's about helping you understand how it impacts the market, not to teach you how to trade it. You want to understand how it impacts the market. Now, if I come look at it though, let's look at the US 30, because this is what we typically get excited about. Okay, this is what we typically get excited about and want to jump in. So if I'm looking at the US 30, okay, this is December. Okay, and this is what we were expecting last Friday. Okay, so this is, hold on, let me get this together. So looking at this, okay, now this is where that technical comes in. I mean, the fundamental come in, because that report hits and I changed my time. You see, I changed my time to New York, which is my time zone, Eastern Standard Time. And you can kind of see that when it hit, and of course it still reacted, just like I told you, you know, how, look, they're still buying. That's like that's still buying, that's still selling, right? So yes, that report hit, but then it still bought for quite a while. So, which ultimately ended up, from when you had that initial pullback, it'll pull back a little bit sometimes. And so it ultimately spiked up for 333 points, right? That was a 333 point spike. And what does the market always do? It corrects itself. So whether this is what we were expecting. So that was a positive report in December, once a month, positive report. and then it comes back and the market corrects itself. So this is where the market was, right? This is where the market was, okay? Market pulled back some, market came back around, and it corrected itself. So 333 points, and then it corrected itself. So that was a nice spike, right? So this is why we like to trade the NFP. So then you come over here to January. So January, it was a negative report. It was not what they projected, okay? There was less than what they projected. So this is where the report hit, okay? It came down. So that was a 242 point drop, right? A 242 point drop. But then guess what? The market corrected itself and it came back from where it started from. So the market always corrects itself. It always, so yes, you have your fundamental, you got your technical, you got your technical, you get your fundamentals, and then it goes back to your technical. So the market corrected itself. See, and this is that little box showing you that we had our spike, the market corrected itself and it got back on track. And it just so happens that on Friday, what was Friday's date? That was, because I didn't mark that one up. I need to look at what the date was real quick. The 7th. When we were expecting that spike, because that was a very good report. Let's look at the report first, right? Let's go back. So last week, non-farmer payroll, right? See, 147 was the last month, December. 160 was the projected, right? 160 was the projected, and 225. 225 is actually what was added. So that's a nice, that should have been a nice spike, right? A very, very nice spike. So I go back to the chart. Go to the chart. That should have been a nice spike in a positive direction. 8 o'clock, what did we get? This was our little spike at 8 o'clock. Why is that? The coronavirus. So we had a lot more going on with all those companies shut down in China, being impacted and everything else. So I just showed you the past 2 months, and we can go back and I can show you all the little spikes, and this really wasn't a spike. This really wasn't a spike. So this was the coronavirus. So the coronavirus trumped our NFP report. So this is what happened on Friday. So this market should have went this way and not this way. So this is how it impacts the market. So just so you can kind of get an idea of how NFP impacts and why we like it. But even once again, look at it, right? Everything happened with the coronavirus, even still, okay? Let's draw that line, because the coronavirus trumped our NFP report. Now look at what happened. Let's draw a little box around here. And what is it doing? Do you see how it's correcting itself back to the technical analysis? Do you see how it's correcting itself back? This is the coronavirus impacting, but yet it's coming back. So while yes, this is technical analysis, fundamentals impact the market, but the market always corrects itself. So it is definitely correcting itself. So this is why when you guys are asking, oh my goodness, what do I do about my trade? Hold it, ride the wave. Did it hit your stop loss? You know, where are you at? The market is coming back. The market is going to correct itself. The market is going to fix itself. It's no reason for you to spaz out. It's no reason for you to like get paranoid or anything else. The market reacts to the fundamentals, but it will definitely correct itself. So even right now, we are still buying, oh my goodness, and still selling, right? So this is still happening. And why is that? Because I still have my fundamental analysis. What we know about this 4-hour PSAR. You're right, do not be emotional. What do I know about this 4-hour PSAR? I know that it has to, but what is going to happen? This is going to correct itself. It's going to put itself back in position of where it needs to be, right? It's definitely going to get back in position. So, but that's how you understand. So you just have to make the decision. Like some people waited. Some people waited on it to hit, you know. So like I said, I'm not going to teach you how to do that, right? Not going to teach you or even attempt to. Once again, it's all personal decisions and things like that on how you want to do it because you are the signal. But I really want you to understand. If you're scalping on a 5-minute, it's outside the PSAR still. Yes, 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 yes. Mm-hmm. I'm not gonna mess with this one. Let me stay. Let me just open. So let's go down here. So if you want a 5-minute, well, you're scalping the US 30 on a 5-minute. You talking about the US 30 or gold? Gold. Ha! I got y'all scalping gold. Gold. Hopefully you scalping gold with the gold will bounce around like a ping pong ball. I still love gold. So understand what is it doing. Are you talking about gold? This, you talking about what we're looking at right now? Oh. Okay, I'll go back to it. Let me see. So understand that overall, well, this is a little consolidated right here on this screen. So if I'm going here, but I mean, no matter what screen you're on, you're always looking at that PSAR. You're always looking at that PSAR. And if I'm looking at my higher time frames for your confluence, right? You're looking no further than your 30 for your confluence, but it's a lot of consolidation on gold right now. So I really can't give a good example. It's a whole lot of consolidation on gold. So, and you're talking about GBP, NZD. So what about it? You said you would not have traded that. You didn't see this has a flat top. You would have got in right here. Actually, honestly, you got a red top. You got, so this one, let's see. So you got a blue line cross over the red and a downward momentum. You got a red candle with, actually you got a red candle with a flat top here, and this is where your PSAR flip. Now these are small, once again at GBP. So honestly, this started back here. This honestly started back here. This started way back here. So you saw it coming back here before the news, okay? This started well before the news. So now, when you started your confluence, So even if I looked at confluence, I'm not dropping to the 5 because we already know. I'm just trying to show you the hour for the confluence up here. So even before, we had confluence on the hour. So from the 15 to the hour, we had confluence. So let's say we didn't know the news was coming or anything about the news, we had confluence up here. So you are technically would have been in this trade already, technically using your technical analysis. You would have already been in this trade according to technical analysis. And then, so this is honestly doing, so really with this news having the what the news did, honestly, because it literally was 1-1-1 across the board, like it was positive news. What it did, honestly, is just push it to the direction that it was pushing. It just pushed it forward where it was already doing. Because look at this. I have my technical, I'm on the hour, the 15 is geared up. It was a little slow and consolidated because it was waiting on the news, right? But it was already blue line cross over the red, downward momentum. I had my candles geared up. Then on my hour, it was literally, look at my blue line cross over the red and the downward momentum. So my current swing in the market, even on my 4 hour, my trend in the market, look at, you see how this is actually my 4 hour actually is already, so the whole trend of the market right now is in a sell for this currency pair. So it's already geared up. So the only thing the news did is push the momentum forward. So this just might have taken till, we might not have seen all of this until sometime tomorrow night, you know, like, or whenever, the next 2 days or so, we might not have seen, you know, I'm just guessing, but who knows, you know, we would have seen it, but we would have seen the impulse correction, continuation, right? That's what we would have seen with this. So just like this moved down, okay, just like this moved down, but it came down, it was impulse, correction, continuation, correction. So that's what all that was. So we would have saw all of that, but what this did, the news just pushed it forward. It just gave it a little nudge because it pushed the technical, it pushed the technical analysis forward, and we got a spike. But the market's going to correct itself. But the thing is, it's already in the direction that it's going. So that's, you know, so it's, the market's gonna fix it and correct itself. And that's why this is so important to understand, so that you are the signal. That's why you are the signal. So whenever you hear anybody say, oh, like looking at this, if you know that it's what it was 1%, is projected to be 1%, and you see, and you know that GBP NZD, my counter currency is NZD, and somebody telling you this is gonna buy, you have enough knowledge to say pause. Or if somebody says it's gonna sell, you can say pause. Let me analyze this for myself. Let me look at this. Pause. Right? You can do it for yourself. So I know this is a lot of information. Oh, thank you. I'm glad. I'm so glad you're catching on. I'm so glad you're hyped. I'm so glad. Because you are the signal. That's why we say, I am a master trader. I am the signal, and all my trades end in profit. That's why we say that. That's why we do it. That's why we believe it. That's why we walk in it. So do we have any questions? Any comments? Because I know a lot of information. I want to make sure you guys understand it. You are so, thank you so much. All right, so let me see here. So that's, now you guys, oh, you're so welcome. Now you guys understand, before we start trading, why we check the news folders every day, every morning, every afternoon. Before you start trading, you want to make sure you check those red folders. This is why. This is why. And you want to understand those currency pairs. My question is, what's at the 80 and the 20? The 80 and the 20 is my stochastic. The 80 and the 20 is my stochastic. At the 80, I'm looking at the 80, my stochastic is the leading indicator. My 80, and in my crossover at the 80, the blue line crossover the red around that 80, it tells me if I'm gonna sell. That crossover around that 20 tells me if I'm gonna buy. That's what that is. We really look at, our folders matter, right? Our folders matter, but the red folders have that impact. The red folders are the ones that have that impact. The red folders are the ones that move the market. You know, that, I mean, I don't want to say they don't matter because they wouldn't be there if they didn't matter, right? So can you drop your question in the chat? I see I got a hand raised. Can you put it in the chat? I kind of got it locked because we had too many people unmuting the mics. If you put it in there, I definitely get it answered for you. So, and after you determine this, just make sure you understand. And just real quick, I can show you this. This might help you understand. So where is it at? So if you think about this, right? Just real quick, I got a few minutes and then we're gonna transition this call. So this is the importance of the 5 minute, 15 minute, and the hour, okay? I want y'all to think about this. So if this your little caravan, right? This your little caravan. This is time frame confluence, okay? Y'all driving together, you need to go together. The higher time frames really tell you what the market is doing. So out of all of them, these is the most important, okay? Just the most important. These back here are the most important. So you got your 5 minute. So you got your 5 minute. You got your, I wasn't analyzing any trades right now. This is strictly a training, like we're training. So I really, okay, where do you find those? I'll give you those websites. So you got your 1 hour. I'll give you those websites. And then you have your 4 hour, right? So understand that this is your little caravan, right? That y'all gotta travel together. Y'all, and remember, before all of this, I was a logistician, so this makes sense to me. So this is the 5 minute, right? The 5 minute has to go first. So this car, this little vehicle, he can't go anywhere unless he moves, right? He really can't go anywhere unless he's going somewhere. So this is why the 5 minute must still be selling and still be buying. So he can't go anywhere. These are the ones that move. This is where the market's really going. So this, when you look at it in a big grand scheme of things, these are really like tighter entries, your scalping potentials and things like that. So when we're looking for those, these are important. So this is your swing of the market. When these two are confluent, this is your trend of the market, right? If I got this one, this is your swing of the market. These two are confluent, this is your trend of the market. So whatever direction this one is going, the swing of the market is important. So you want to make sure that he's coming with you, right? You want to make sure that if you're going this way, you're going this way, he's somewhere right behind you. So because he's behind you, right, that's why I say it's a caravan. So because he's somewhere behind you, right, you want to make sure that he's following you. You want to make sure that you're not going somewhere and he's not behind you. So, because it could be whatever. So you don't want him to be going up for a buy and you to be going for a sell, right? This is not what you want to be happening. So because that's not good. That's not what you want to be happening, because you know that you're trading the wrong direction. And I just wanted to kind of point that out. Maybe a visual, kind of lack for time, but it would have got a little bit more creative for you. But to me, but he's first. Whatever happens, whatever direction this one is going, it's going to happen here first. And because he's the first, he's the smallest time frame, so it's gonna happen here first. So you're gonna see it there, but this one can't move till this one does. So that's why when we check time frame confluence, we're checking this one, and and of course we're checking this one. So that's so very important. Now your news folders are FX Street. FX Street is your news folder, and then you got Forex Factory. FX Street and Forex Factory. Thank you, Cal. So you got FX Street and Forex Factory. FX Street and Forex Factory. So, but all right. So, ladies and gentlemen. So, I definitely want to highlight something. You guys are so very welcome. So what I want to do is, here in Jacksonville on the 22nd of February, I'm gonna put us back in January. Here on the 22nd of February, we have our Economic Equity Be Your Own Bank Expo. I'm so excited. You are so welcome. So I'm so excited because here in Jacksonville, Florida, we have the Be Your Own Bank Expo. Now, I can tell you where you want to be. Where do you want to be? You want to make sure that you are registered. You want to make sure that you are in a place. You want to make sure that you do not miss this event. If you get any value by showing up on the calls, you get any value from the calls, you get any value by just Monday through Thursday, trading with us, trading live with us, just anything on these market talks, you get any value from that. I promise you, you want to show up. When you show up, you are going to walk out empowered. You're going to walk out being the signal. You're going to walk out a master trader. You're going to walk out of there understanding your value, understanding your economic empowerment, understanding who you are. So on the 22nd of February at 12 o'clock, you want to make sure you're registered and you want to make sure you're there. So make sure you're registered today. So it doesn't matter where you are. I know if you're in the Jacksonville area, you need to cancel all plans no matter what it is that you had going on. You want to make sure that you are there. So, and if you are nearby in the state of Florida, you want to make sure that you're there. Georgia and all surrounding areas, you want to make sure that you're there. So get registered and make sure you are there today. Make sure you get registered tonight. And you are so very welcome. It's a private message in the chat, but it says, thank you for allowing me to be my own bank, broker, and boss. And I had to share that because that is the point. We're talking about 1 million families, financially educated, impacted, empowered. So I love you all, and that's what this is about. But sit tight, hold tight, because we are not done. We are not done. It is time to transition this call. The gentleman that I am transitioning this call to